In this video, I'm going to show you how to work with business owners earning $2 million or more, exclude up to $10 million of capital gains tax on the sale of their business, tax-free. If you've ever dreamed of an exit, or maybe have one on the horizon, this video is for you. I've used it myself and for other clients, and it's a very powerful tool. There's some key areas that have to be followed, and that's what we're going to dive into in this video. Hey, my name's Lloyd. I'm a certified public accountant and certified tax strategist. We help business owners throughout the United States slash their income taxes. Our goal is for every client to save $1 million or more in income taxes. To make that possible, there's some things that you have to do. One, you have to understand what the tax code is, and two, you have to apply it. That's why we have videos like this to help you get the education and to be able to understand how to apply them so that you too have the possibility one day of saving $1 million or more of income taxes. All right, let's get into this. The IRS allows founders and early investors to exclude up to $10 million of the gain on the sale of the business as long as it's qualified under Section 1202. It's also important to note that many states conform to this 1202 election as well, so you may have federal and state tax savings to combine together to provide an even bigger benefit for you depending upon your personal situation. So what is Section 1202 stock? It's stock in a C corporation that you hold for 5 years or more that allows you the possibility to be able to eliminate up to $10 million of capital gains taxes. So how do you qualify for this great deduction? First, you must be a non-corporate owner. What does that mean? It's an individual, trust, or estate. You must acquire the stock when it's originally issued. You must hold it for 5 years or longer. The assets have to be under $50 million. And you must use over 80% of the assets in an active business. Can any business qualify? Unfortunately, no. There are 5 basic areas of businesses that do not qualify for this deduction. So let's look at those next. Health, law, accounting, consulting, that's number 1. Number 2, financial or brokerage services. Number 3, hospitality, hotels and restaurants. Number 4, farming, mining, oil and gas. Number 5, real estate. Those areas are excluded from being able to use Section 1202. Okay, so now we know which businesses don't qualify. Let's look at the holding period. The holding period needs to be 5 years or longer of original issuance. If you have an LLC, it does not qualify. It has to be a C corporation. If you have an LLC, it has to be converted over and the clock starts over again. It's important from a planning perspective, put the C corporation in place when you first start the business, or as soon as you come to the understanding of this valuable tool. Waiting can cost you a lot of money. We never know what's going to happen from a sales standpoint. Your business may blow up and somebody wants to come give you a big check. We want to plan today for what may happen in the future. All right, let's run the numbers on this and see how this might apply to you. Business owner sells for $10 million. They qualify under Section 1202. What is the benefit for them? $2.38 million of federal income taxes are not due on this sale. That's a huge benefit for somebody. Let's also look at your state income taxes. If you're in a state that taxes you and you qualify for Section 1202, that in addition to the federal is a benefit that you have. So you have up to $2.38 million plus whatever your state rate is, depending upon if it applies to you or not. That's a huge savings for you. Whether you're selling at $1 million, $5 million, or $10 million, it's a lot of money to put back in your pocket that you can take from your business on the sale and invest it for yourself. It's important to remember that there are advantages and disadvantages to C corporations. When you're doing your planning, you have to understand how they work and is this going to be best suited for your business today and in the future. We do a lot of work with entities and look at multiple entity structures. Maybe that works for you. But it's really important whenever you're doing the entity analysis to understand the pluses and minuses of all of the different types of entities and find the one or ones that work best for you. We utilize a very simple system when we're trying to understand how to maximize tax savings for a client, and I want to share that with you today. We look at entity structure, income shifting, missed deductions, loopholes, investments, tax acts, pending legislation, and how that might impact you. We look at that in a current and on an annual basis. We grade all of our clients on a simple green light system. Red, yellow, green. Red, danger. There's no planning in this area and you have a lot of missed opportunities. Yellow, you're doing okay, but we need to tweak some things to maximize where you're going. Green, I've got this one nailed and it's all working well for me. Using this simple method to be able to analyze all of your strategies helps you to understand whether you have things working in your best interest or not, and you're saving the most tax dollars. Okay, so to make this work, I'm gonna go through the 7 steps that you need to consider for Section 1202. Let's start off with number 1, form as a C corporation. Number 2, stock at original issuance. Number 3, keep the assets under $50 million. Number 4, make sure that you're in the right industry. 5, hold this for at least 5 years. 6, maintain clear records to be able to document that you have a Section 1202 company. And number 7, when filing, make sure that you file Form 8949 and on Schedule D correctly to report your gain and secure your tax savings. So make sure that you go through and analyze these categories and grade yourself and determine how you're doing. If you feel like you're not where you need to be, you're looking at some yellows, you're looking at some reds, or maybe you're not even sure what color you've got, it's a perfect time to reach out to us so we can help you. We work with successful business owners throughout the United States to help slash their income taxes. We grade how you're doing, put a plan into place, and make it all work. And we don't just do it one time. We work with you throughout the year and do this every year to make sure that you're maximizing your tax savings. To learn more about where you stand today, schedule a call with my team. We'll be able to analyze your situation and see what gaps that you've got that we can help fill for you. Also, don't forget to like and share this video. If you have any questions, feel free to leave a comment.